Dow Jones Industrial Average, it's up fractionally right now, 90 minutes into trade by about 0.4%. S&P 500 and the Nasdaq, though, still got a little slippage taking place there. Joining me now, we've got Thomas Martin, who is the GLOBALT Investments Senior Portfolio Manager. And Thomas, you say that the range of expectations for 2025 are narrow, but the potential outcomes are wide. Just walk us through what that means for the S&P 500 and the Fed.
Sure, great, and thanks for having me on your show. Yeah, it's all the strategists at the right around November put out their expectations for a target price for the S&P 500, and a lot of times the standard deviation of those estimates is fairly wide, and as is the percentage gain that they're expecting. But that's come in this year. It's one of the lowest standard deviations in a while, and the rate of return that's centering around, at least from November, was about 10%, which is in line with the long-term, decades-long-term market average for the S&P 500. So that, to me, says that the strategists are fairly conservative in the kind of bets that they're willing to make in terms of outliers. But if you look at what the factors are driving the markets, potentially driving the markets, well, with all the policy uncertainty, the rates being where they are, inflation expectations being difficult, you could easily see a down market even at the end of the year, or a very strong up market. So there's a wide range of expectations, and we're sort of getting a preview of that at the beginning of this year, where you're getting close to a pretty good correction.
And so all that considered, and I expected you to say where earnings would drive this. What is the earnings narrative going to be from your estimation? Big banks are going to be kicking off earnings season this week. So your anticipations here for earnings this year?
So for the whole year, for 2025, it's right in the 15% range year over year for the S&P 500. And that really is more back half dependent, as you're going to see low teens in the first half of the year, maybe a little bit less so even than what we're expecting for the fourth quarter of this year, and then kind of a ramp up. And I think that's where the uncertainty lies, is that those numbers are far enough out that it's hard to predict what those are going to be. But let's just say that we got 15% earnings growth this year, and the expectation is for 10% rate of return. That means that you have to have multiple contraction as a result of that. And that could be driven by interest rates being a little bit higher, which they've already started to do, and also that just valuations were high and sentiment was high to begin with, and that needs to normalize.
And so all these things considered, what sectors do you see with the high growth potential this year?
Well, we're going to get a taste of it when we report fourth quarter earnings, with the banks in particular, and financial stocks are expected to have the highest rate of growth for this quarter. Now that is expected to moderate going forward. You're still going to get decent earnings growth from the sectors that have carried us the last couple of years, which is information technology and communication services. But it's broadening out, and you're seeing materials and healthcare and the financials all having decent growth, and the majority of industries having over 10% growth, which is pretty attractive for equities.
So walk us through some of your stock picks, the individual names that you think are set or well positioned to outperform this year.
Sure. The names that I like to talk about with folks this year are ones that what you call self-help type companies, and those are companies that because of their situation or their industry situation, or more particularly their positioning within the industry, gives them the opportunity to either raise prices or increase revenues and increase their margins. And so one of those examples is a company called Freshpet, which is pet food, but it's fresh pet food, as the name says. And the thing about this company is that they have a very low market share of overall pet food, somewhere around 4% of what is about a $37 billion industry, bigger than quantum computing, just as sort of a funny touch point. But in addition to that, they have very high market share, if not being the 90% leader in fresh. They have a lot of expertise in that they've built up over time, and they have a moat, and they have a way to get further penetration into their customers' wallets, get more customers, and then increase penetration through their distribution centers. So that's an example of a company that has a lot of ways that they can increase their earnings.
Yeah, I did not have Freshpet and quantum computing even being in the same stanza on my bingo card. So thank you for checking that one off if somebody's out there. What is your top tip for portfolio evaluation this year?
So this year, because you're coming on the heels of two very strong years in the market, which you could say were more ebullient, not to say speculative, but you have to get down to fundamentals this year, and that's why I pick companies with strong and improving fundamentals. And diversification is very important. And from a total portfolio management perspective, you need to be prepared to not have to sell something when the market's down, either because you need the money or because you feel uncomfortable with that. So you have to have the right amount of cash in your portfolio to cover those kinds of needs and to let you sleep at night. Now, that used to be an inclusion in bonds, and perhaps that's a bit better on the shorter end than on the longer end, since we don't know where the longer end necessarily is going to end up. But with regard to stocks, you still want to be diversified, not load up all into one sector or industry or theme or hype. So having diversification across those sectors and across the asset classes is really important to increasing staying power so that you can hold on to your wealth for the years to come.
Thomas, thanks so much for taking the time here with us today. Really appreciate it.
Great. Thanks for having me.
Certainly.